In this video, traders, we're going to look at the day traders intraday gap on earnings strategy. Stay tuned. Hey traders, a warm welcome to you. So this is one of my favorite setups when I like to trade stocks that have significant catalysts, and most of the time that is going to be earnings. When they gap significantly, there is opportunity. Full stop. Now, whether you implement this strategy or whether you implement another strategy, there is opportunity to get on the end of some good trades because the supply-demand imbalance is normally so significant that the money flow is large. Those two combination of things means an edge for us as small retail traders. And I say small relative to the funds, relative to the people moving big money, regardless of what position, whatever account size you're trading, whether you're trading with a 10 grand account or a 100 grand account or a £1 million account. We are small, which is good because we can jump on the coattails of the big money. So this setup is specifically for stocks that have gapped lower on earnings. Now, there are similar setups for those that have gapped higher, but this is very specific for lower gaps because we have a bit more fear when we have lower gaps lower. When people have been buying into stocks, which that's what people do, they buy stocks, they see a little bit more, seem concerned when we have big gaps lower, and you start to get people, hedge funds dumping stock, people who are investing in the stock dumping as opposed to gapping higher, which is pleasing for most people apart from a small section of shorts. So this is for lower gaps. What are we looking for? We're looking for a catalyst, which is normally, like I say, earnings. Don't want a broad gap lower, want a very specific stock based gap lower. A miss on earnings, anything that is just bad for the stock. You don't have to be an economist. All you have to do is read the summary and it says, hey, we've missed on earnings, we're kind of lowering our forecast. Whatever it may be, it doesn't matter. The point is, what's the price doing? In this example here, guys, I've got Twitter. I've got a 1 minute chart. This is aftermarket or pre-market. This actually is pre-market. Depends on when the company's going to release earnings. Could be aftermarket, pre-market. Volume is the stock is still trading, but volume is lower. Liquidity is lower. It's generally a quieter time, but what happens is earnings will come out and things will start moving. So look, we've got a gap low. We want a gap low of at least 3% after earnings. We're closing at kind of $44 ish, and we end up settling a few minutes later around sort of 36 to 38. That is a more than 3% gap lower, so we tick that box. We want volume to be high relative to normal. Now, on something like Twitter, a big stock where you've gapped that significant amount, volume is going to be high. Okay, so we've got that. Now, we also want to see that this stock does not claw its way back to the gap, because some stocks will gap lower and they will drive higher and higher and higher, and then they'll go even higher on it for whatever reason. We want to see price action, which is why this is so powerful, because you can see the market tip its hand early. We want to see price action holding the price near to the lows. Now, what do we get? We get a bounce up, we get a retest, and we get some decent support level here. Now, this is the stuff that you need to note down and jot down for the opening bell. So you've got support level here. We push up, we kind of fail. This 38 then becomes a bit of resistance, several times 38. So we then note that down for our next day, and we start to open the day. The bell goes and the options open, all the big volume comes in at about 37. Right, so we're still down a significant amount. We're not at the full lows, but we are down a significant amount. The key levels we're interested in are going to be these levels here of support, which are actually opening just under, which is like 37.40, the 38 above, and we're looking for this 35.80-ish, 35.90, yeah, 35.90 here, or 36 level, 36 to 35.90. Those are our big levels. So once we've got that, we've got the increased volume, we've got the gap lower, decent gap lower. We have a lot of things ticking the boxes. So what we want to do is, when we start driving and holding below support, in other words, we're opening around that support, that $37 level support, 37.30 support. When we see that, we want to get short while the price is holding onto it. Now, if you look at the first minute, the first 10 minutes of this is normally crazy, guys, and opportunity presents itself. The price pushes back up. I'm going to dial in a bit, hope you can still see this. The price attempts to push back up to our key level. Now, this is why it's so important, bearing in mind I've just loosely drawn this. If we were doing this properly, let's do it properly as we would do it with our correct lines. Let me get rid of that one. it pushes up to the level that we've already seen from pre-market. We don't have to be trading pre-market, we just know that's a good level. Now if it carried on pushing up and carried on to 38, we'd see how it responds. We are looking for shorts only during this, not looking for longs, shorts only. So while it's driving up, we want to see how it behaves. If it drives up and fails at 38, we wait again until it holds below the support. Bearing in mind, guys, we've got a lot of meat on this bone. This thing has got at least $35 on it, if not lower. This is, and we also got to watch out for that level of support. In fact, let's draw that in as we would do normally. There, so we're prepared, right? That's the important thing to be prepared. We've got our trading plan, we know what we're going to do. Okay, it fails at support level and starts to drive lower. We want to get short as it starts to break intraday lows. 36.67, that's the time we're looking to get short. Great, we're holding it. Now we also want to get short again when it's holding below other support levels. When it's pulling back and when it's holding below support. It pulls back here, we want to get short again. Now, I understand if you don't want to take it so soon. If you've just taken that break there, fine. Maybe don't take the break, maybe wait for a first pullback consolidation. Here's an ideal opportunity to get short. Driven down off the open, we're below decent support level. Be cautious, there is support here, but you've got the weight behind you, so you can take some extra risk on this kind of thing. Then we start to drive through. Now the final entry for short, again, is when you're holding below a decent support level. So you've really got three specific entries. You don't really want to be fading a push to high because it could burst through. You want to be either taking the break of low here, the consolidation here, or the consolidation and pull back to support. I mean, that is textbook stuff. If you're the most conservative trader in the world, that is still the entry that you will be looking to take. Even if you don't want to take any of this, you want to wait for it to settle down the first 30 minutes. It breaks through support level, pulls back up, even forms a little beautiful candle for you to get on, a nice little wick above. There's your short. Even if you're shorting there at 35.87, you're away. Now what do? You're looking for 1 ATR on the day. Let me scroll out. Bearing in mind we've got the overall low, which we could take as 34.34, but I think because it's such a spike, I'm going to call the low really around that 35.80 level. That was what I would call the low if I would be trading this again. And what our targets are, guys, is we are looking for, I'm going to zoom out to a 3-minute here so I can fit it all in the window a bit better. We are looking for, where are we all gone? There we are. We are looking for 1 ATR move. That's our final target. So we're going to look at our daily chart. We look at our daily chart. What was the ATR before it all started kicking off? It was around $1.70, $1.80. So we're looking for about $1.80. So assume that high was 37.40. Let's call it $2, right? 37.40. Let's be too accurate here. 37.40. We're looking for about 35.40 as an initial exit. So when we're starting to short there, that's one thing we've got to be cautious of, that we've got that 1 ATR. But bearing in mind, if volume is high, we are probably going to get significantly more than that. We're probably going to get 2 ATRs. And bearing in mind, if we actually look at the correct ATR value, 1.8, we're looking at about 1.8 times 2, $3.6 range. So $3.6 or $3.50 range if you want to average it out. With this 37.50 was the high. It was going to be about 34 bucks, and look at that, actually 34 bucks is where it closed. So we need to keep things in perspective, but we also need to hold a runner in case this thing absolutely collapses. Now, I'm always an advocate of fading or closing off into lows, into pushes of lows, into retests of lows that fail, you know, into midday pushes are often good. But I'm also an advocate of holding until the close, unless you see, keeping obviously your risk managed and kind of capping your risk when you get a high and waiting, so you're not sitting on a full reversal at the last hour or something stupid, but holding it while it's weak, stay with it and hold it out to the close. Now, this is the kind of thing you can play around with. When you've got the wind behind you and the weight on your side, you can trade this almost scrappily. As long as you're not diving into new fresh lows too late in the game after you've moved 1 ATR, I'd say that's a little bit risky. As long as you're selling into pullbacks, as long as you're selling early breaks of support that you've got from the prior pre-market action or after-market action or the prior day's action, as long as you're selling holds under support, as long as you double check as well on your daily, and this it doesn't really come into play much in this one, but as long as you're double checking on your daily where decent levels are. Now we know that actually there's a really decent level there at kind of 35.80, but you know, when we look here, we can tell that was a decent level just by the way it held pre-market. So we've already got that mark. But let's say we had another level a little bit lower at 34.50, we would have that as well marked on our chart so that we're ready if we come into that 34.50 level. If it's a bigger daily level, we'd come out of it. All right, guys, that's the setup. That's the structure of the setup. We're waiting to go short on those kind of different triggers, on those different parameters. Useful for earnings season should I say, singular. Useful for when stocks are missing, worth looking at, and something to perhaps tweak and adjust and put into your trading setup arsenal. Anyway, take care, keep the risk managed. Goodbye.